Hi there, welcome to Kneppy Invest. At the end of 2022, I chose 19 companies that I thought would perform fairly well in 2023. Now, I did have a few rules in regards to what companies I could choose. One of the rules was I did not allow myself to choose any companies that I owned at that point in time. The other rule was I wanted to choose companies that I thought would look like they could be breaking out on a technical basis. So most of these choices was just based off technicals, and the main reason I want to do that is because trying to pick the timing in terms of any thematics is impossible to do, particularly if it's over a 1 year period. And I have noticed that a few viewers have gone down that route in choosing their 2024 companies. It's just around thematics. And I'm not going to do that when I choose my 2024 companies. I'm just going to do just look at the charts and look at what companies seem like they want to go higher, seem like they might be breaking out. So that's the main thing I did when I decided on these 19 companies. I'm not sure why I only chose 19 companies, not 20, but for some reason it's 19 companies. And then just above my head here, what I've done is I just assume that on January the 2nd, I bought all these 19 companies equally weighted, and we can see how that little portfolio could have performed over the past year. Now, I did the same thing for the viewer chosen companies. I think it was about 30 companies, and that portfolio was down a little bit, about 0.9% or something ridiculously small like that. And my group of 19 companies was up about 39%. So I probably should brag a little bit. So that's a nice little gain over 1 year period. I think the whole market was up a little bit as well, but that definitely beat the market. So choosing or using technical analysis to choose my 19 companies seems to have worked really well. Not all the companies were up. Worst performing company was Alcidian, down about 50%. Then we had Dust Group down 39%. But did have three companies that grew by more than 100%. Two companies almost by 200%. Nuix and Doug, Ordinate 113%, and another company, Avita Medical, which I really wished I actually decided to buy in my real life. That was up 98%. Now, funny enough, all these companies I did not own at the start of the year, but I do now own quite a few of these companies. For instance, I actually do have Integrated Research, Domino's Pizza. I have traded Megaport during the year. I now own Zero. I've traded Nuix during the year. Doug, I actually do own now. And Ordinate, that's another company I own. But quite a few of these companies I have not even thought about owning in the past year. And the first of those companies is Platinum Asset Management, down about 25%. I probably should also mention I'm recording this video on Wednesday, the 27th of September. Trading has just finished for the day. And these percentage increases or decreases in share price since the start of the year are up until the end of trading on the 22nd or something like that. So it does not include trading on the 27th, 28th, and 29th. And maybe I should have waited because quite a few of these companies are up pretty big on the 27th. However, those who are up big are already up big a fair bit. I did see Nuix was up about 5 or 6%. Anyway, Platinum Asset Management, might zoom out a little bit more, and you can see why maybe I was getting excited about this company. Share price was going sideways this time last year. And in fact, in January of last year, the share price looked like it was breaking out. So if I decided to sell this company, in fact, if I actually did trade this company, I probably would have sold out because the share price rallied about 20 to 30%, and that would have been probably my sell signal to get out. And then the company released some bad results in February, and the share price went down a fair bit. So Platinum Asset Management down 25% from the start of the year. Another company that's down a little bit is Integrated Research. This company share price is down 25.6%. Rallied nicely in the last few days. They actually did win a contract. And possibly, depending on some of the rules I use for choosing 2024 companies, maybe I will choose Integrated Research again. And this time last year, the share price did look like it wanted to break out. The share price ran pretty hard on the 24th of November 2022, up 34.3%. And the share price looked like it was trying to break out. particularly in January after I chose this company. Share price rallied all the way to 66 cents, but has been under pressure since then. So two bad companies out of the way, and then we get to Avita Medical. One company I wish I really listened to myself, because this company looked like it was trying to break out in December of 2022, and then it broke out. It broke out 18th of January 2023, and it broke out at around about $2.40, roughly that. And then share price went to $2.40 to a high of $6.20. So in fact, this company more than doubled in a fairly short period of time, about 8 months. But the share price has fallen a fair bit from that high. So possibly, if I decided to trade this in my real life, I could have taken a fairly good profit in this company. But the share price has been volatile over the past year. And in fact, I still remember looking at this company back in January or February and thinking, being fairly bullish about the long-term future of Avita Medical. Now on to Domino's Pizza, which has had a tumultuous year. So one of the reasons I chose this company is if we go back to December last year, so all these charts are just based off what I saw in December last year, or maybe November, December. And in December last year, the share price of this company was trying to rally, and it rallied pretty nicely in January, got to a share price of $76. And then the company released their results in February, and the market hated it. Share price down on that day, 23.8%. Share price fell all the way down to $42 in June, but has rallied nice. Not only has the share price rallied nice, this is a possible buy right now in terms of just the technicals. Share price has broken out. Share price was going sideways. It has broken out over the past 2 weeks and is now at $58. And the last time share price was at $58 was when the share price fell a fair bit in February of this year. So this chart is looking better for Domino's Pizza. In fact, the chart is looking better than it was in December of last year. So possible, another company to add in my list of buys for 2023 or 2024. However, I actually do own this company right now. The next on the list is DDH1. There's no chart for this company. It's no longer on TradingView because DDH1 has been bought out by Parenti, up only 2.4%. So barely a blip on the radar. So almost can ignore DDH1. Another company that I think has been bought out is Outcome. It's now off the ASX, so no trading anymore for Outcome. Last time it was traded was on the 21st of December, and Outcome down 12.5%. And you can see back, I don't know why, I think, if I remember correctly, there was this big dip in the share price back in December. Share price fell to about $11, and I thought it hit support level, which was a long-term uptrend, and I thought it would bounce. It did bounce in January, back up to $14, and it went as high as $17 in July. But you can see that massive decrease in share price from July all the way through to December, and then the company has been bought out and now came down to only 12.5% for the year. Another company that is being bought out, as is being acquired, is Pact Group, a company I've held in the past, many years ago. After they listed on the ASX, the share price, the chart of this company was absolutely phenomenal, and then I sold out. It was not a long-term buy. And you can just see this company has been bought out. You can see this massive volume coming in the last few weeks, and the share price went up something like what was it, 22% because of the takeover bid. But if we go back to December last year, share price was going sideways and it was holding above $1. And I thought if it could remain above $1, this could be a sneaky trading option. There was a possible move back in February. Share price went from $1 to a high of $1.40. So it's a nice little 40% rise in share price in a fairly quick period of time, about a month period. But then share price just fell and kept on falling. Fell all the way down to 56 cents in June and then was going sideways before this takeover bid. So honestly, this was never a trading option for me during the year, because even though the share price rallied pretty nicely in February, March, it wasn't really a strong rally in my opinion. And overall, Pact Group, even though there was this takeover bid, is still down 16% for the year. Now we go on to a round of companies that did really well in 2023. First of these companies is Megaport, and I have been trading this. I did trade this company, made a nice little 30% profit, something like that. But if we go back to December last year, this is another instance when the share price was in a downtrend. And I was just thinking, eventually that downtrend will come to an end during the year, and it did come to an end. It came to an end about halfway through the year, in May. That's when the share price low was reached, late May or late April, early May at $4. And then the company released a few successive positive announcements. The first one was in May. The second one was in July. The third one was in late July or August. And the next one was in late August. So quite a few really positive announcements, but their most recent Appendix 4C in October was slightly negative. That's why the share price fell. The share price keeps on falling. So I did take profits in this company around about $10, and the current share price is, what is it, just above $9 right now, $9.03. So overall, if we bought in Megaport on January the 2nd last year, is it January 2nd? Was it the first trading day of last year? Oh, no, it would have been January the 3rd because Monday would have been the New Year's Day holiday because New Year's Day was on Sunday. And that means Monday would have been the New Year's Day holiday. So if you bought this company on the 3rd of January last year, still would have made a nice profit, up 42.6%, but nothing like Xero. Even though Xero did release a negative report announcement on the 9th of November, share price down 12.4%, you would have bought Xero nearly at the bottom of the downtrend. And this was just another case where I thought there was some good value in Xero. I thought the bottom might have been reached and the share price broke out in March. I took a position in this company in March at around about $84 or so. Share price went from $84 all the way up to $128. A little bit of weakness in the share price, but the share price has recovered since that weakness in November, up now to around about $112 or so. So overall, Xero up 56.6% for the year. But again, even though Megaport was nothing like Xero, nothing like the next two companies on the list, Nuix and Duds. Let's have a look at Nuix, which I have traded during the year, and maybe I traded it and sold or took profits a little bit too soon. So if we go back to December last year, this is another instance where the share price was going sideways. I thought the share price was fairly low, and I was waiting for a little bit of breakout. The breakout happened really started to happen in January. So the share price of this company ran almost from the instant that January started. Share price actually went to a high of almost $1.60 in February. So it went from about 60 cents to $1.60 in 1 month. 1 month. So this would have been, up 100% in just 1 month. But then a fair bit of volatility. Share price then went from $1.60 all the way back down to 75 cents in July, and then another run. And that's when I traded Nuix back in July. I took profits about a month later. And share price has continued to rally. In fact, this is a nice looking chart. If you do look at the sort of the longer picture, what I mean by the longer picture is if you look at the daily chart going all the way back to when it listed, share price in a well-defined downtrend, that downtrend has come to an end, and the share price is in an uptrend now. And the last time share price was $1 and about 90 cents was way back at the start of 2022. But Nuix was not the best performing company out of the companies I chose. That belongs to Doug, not the person, the company. And this was almost perfectly timed trade. So the share price at the end of December was just hovering around this little resistance zone at about 60 cents, 61 cents. And then it broke out in the first week of January. I can't remember when I bought shares in Doug. It would have been maybe a month later. I didn't buy it when it broke out. But this beautiful chart, share price has risen from 61 cents to current share price of $1.80. So the share price is almost a three-bagger, up 192% since the start of the year. A little bit of volatility the last few weeks. I think people are taking profits. Also, I believe one of the founders or the founder's wife sold some shares because of taxation reasons, and the market doesn't like that. That's why the share price fell 11% on the 29th of November, but I think the market does overreact sometimes when they see founders selling out a little bit of their holding, not all their holding in this case. So Doug, best performing company out of the 19 companies I chose. The next company has been amazingly volatile in the past year. Haven't even thought about trading this company, and that is Road. Amazingly volatile. There's been a takeover bid. Takeover bid was rejected by the board or the management, and then the management did a ridiculous capital raising at a significant discount to the takeover bid price. That's why the share price fell fell 36% on the 11th of September. I don't understand why that happened. It's one of the most ridiculous decisions by management I have seen ever, particularly when the capital raising is at a significant discount to the takeover price. Big Tin Can management did that as well. But you can just see over the past year, the share price of this company has been extremely volatile. Not sure why I chose this company, because back in December last year, the share price of E-Road was in a well-defined downtrend and just kept on falling. So I would have chosen this company when the share price was around about 70 cents, and the share price fell all the way to 40 cents in May. And then we saw the bounce, the takeover bid, and a lot of volatility since then, a lot of volume coming in as well. I actually don't mind this company, even though there is a bit of volatility. I don't mind this company, so I'm going to be looking a little bit more closely at E-Road moving forward. Another company that has been volatile recently over the last few months is City Chic. And this, did I say? Yeah, E-Road up 28.7%. So just timing there, a lot of volatility. Another company's been volatile is this company, City Chic, up only 5.4%. So you might say, oh, 5.4%, that doesn't really show you volatility. But there has been volatility in this company. And if you go back to December last year, the share price of this company fell off so quickly, late November into December. Share price fell from $1.40 all the way down to 38 cents. That 38 cents was on the 20th of December. Share price went sideways. And I thought maybe that signaled a low in this company. Nice little bounce in January. Share price didn't get to a low until November. And that low was around about 25 cents. And fortunately, the share price of this company bounced over the past 2 months of the year. In fact, it went from 25 cents to 50 cents. So the share price of this company doubled in about 2 months. And that's why the share price of this company is up 5.4%. So again, just timing. And this company, based off this chart, is looking a little bit more interesting than it did really December last year. So maybe I should include, you know what I'm going to do? I'm going to include City Chic as a possible entry into my top stock picks for 2024. I'll release that video the day after I release this video, I believe. Next company is Adore Beauty, and this is another company that has a potential to be on my stock pick list for 2024, just because of what's happened in the last few weeks. And this is another turnaround story, another shift in sentiment and a shift in trend. If you go back to December last year, another bad December for this company. Share price of Adore Beauty fell 17% on the 22nd of December, and the low in this company was in October at 70 cents. Share price of this company now is almost $1.40. So the share price has almost doubled since the low in October. And this chart looks probably better than City Chic. And we have seen share price run in the past 5 trading days, up from $1.16 to $1 and around about 40 cents, $1.38. So another interesting looking chart, Adore Beauty. And overall, Adore Beauty up 34% from the January the 3rd. And the reason it's up 34% is because of what's happened the last few months. What didn't happen with Dusk? What happened with Adore Beauty and what was the other company? Adore Beauty and City Chic has not yet happened with Dusk. And I think, again, I might include Dusk on my stock picks for 2024. No run in Dusk share price. Back in December last year, share price was holding just above this little resistance zone at $1.60, then fell through that in March and kept on falling. The low in this company's share price was in June at around about 82 cents. And the share price right now is still struggling to get any higher. Even though it's $1.03, it's still struggling. Still a downtrend, but I think maybe the low has been reached for this company. One of the reasons I also might pick this company is simply because of valuation. I think the PE ratio is 5. So even if the profit of this company falls by half, the PE ratio is still going to be about 10, which also says maybe is a cheap company. Okay. A company I bought. I wish I could say this was just skill. I think it was more luck. So I bought Alternate start of the year. Share price going sideways. You can see share price going sideways. I'm not sure why I included it on this list. I've been very bullish about Alternate for a long time, but I have traded this in the past, and I decided next time I'm going to buy shares in this company, it's going to be for the long term. And I decided to buy shares in Alternate maybe January, February. The share price was going sideways. Share price then moved in February, moved into this very slowly upwards moving trend. You can see that slowly moving upwards trend from February all the way through to August, and then it broke out. A classic breakout when the company released their results late in February. That was when the share price increased 10.7% on the 21st of August. This is a classic breakout signal. Share price struggling to get above this resistance zone at around about $10, and then all of a sudden the company released a really good positive financial information or announcement to the world, and the share price, even though it rose 11% on the day, that's a classic breakout. The market is more interested in the company, and pretty big volume coming in on that day, and that's why the share price has rallied a lot over the last 4 months because of that particular announcement. In fact, if you bought on that day, you still would be up a fair bit because you might have bought on that day at about $11.30 or so, and the share price right now is $16.22. So you would have almost had a 50% increase in share price during that period of time. But overall, up 112.7%. So I can't be disappointed with Audinate. A beautiful looking chart. And this is, to be honest with you, a pretty intriguing company. Incredible moat. This company has the potential to grow significantly over the next 5 to 10 years. And even though people look at the valuation goes, it was pretty expensive. So it's above $1 billion now. $1.3 billion on revenue of $39 million. Well, that's the half year. So if you look at the 4 year, revenue of $69.7 million, but profit of $10.6 million. And I think this company is going to have really high margins. And if they continue to grow their revenue because of really high margins, you can see a lot of that revenue fall to the bottom line in terms of profit. So there's a reason why this company is, would I say beloved among fund managers? Yeah, it is beloved because they understand the moat of this company. Audinate. Now, this is not me trying to sell Audinate anyway. 3 more companies, and now onto the worst performing company, the companies I chose. And there's always going to be a bad performer, Alcidion. Not sure why I chose Alcidion. Chart was starting to look a little interesting towards the end of last year, a little bit of volatility, and I thought the share price could continue to go higher in December. I can see at the end of December, the share price was just below the long-term moving average channel. And if we could get above that, I thought that would be good news. So that's around about 16 cents. But yeah, disappointing year for Alcidion. I don't have as much confidence as some people out there in terms of the long-term longevity of this company because they kept disappointing me. I once was a shareholder of this company about 5 years ago, and they continuously disappoint me whenever I look at their financial reports. Maybe eventually that's going to change, but at this point in time, no. Another company that's under a takeover bid, Symbio. Symbio, why'd I do that? Symbio, it's been bought out by, is it Aussie Broadband? I should know this because I'm an Aussie Broadband shareholder. And Symbio, on the 21st of December 2022, share price fell 38%. So obviously I chose this company for a bounce. And I thought this could be the low in Symbio's share price at $1.50. And it was a low. Share price has rallied really nice, up 88.5% since the 3rd of January. Nothing to complain about. Share price not doing much now because of this takeover bid through Aussie Broadband. And finally, the only non-ASX company I decided to choose was ARC Innovation ETF. Oops, what I keep doing that. ARC Innovation ETF. Chart of this company had been, or this ETF has been a long-term downtrend. For those who don't know, ARC Innovation, or ARC itself, is run by Kathy Wood. Some people absolutely love her. I'm not a fan, I'm not a fan of anyone, really. I don't idolize anyone. Yeah, I think it's ridiculous to idolize people because they're people. But anyway, I don't have a negative opinion of Kathy Wood, a positive opinion. She's doing what she's doing. She has confidence in what she's doing. And there is a possibility that she could be right in a few of the companies she holds in her funds. And the main reason I decided to put ARC ETF or ARC Innovation ETF in this particular, among my selections, is because I thought maybe the low was almost there. And it was. The low in this ETF was on the 28th of December 2022. And yeah, it's been going higher ever since. And in fact, if you look at the chart right now, this chart's looking really interesting. And the share price of this ETF now is at almost 2-year high, up 69.7% since January the 3rd, 2023. So overall, up 39% since January the 3rd. These 19 companies, if I bought these companies equally weighted, in fact, up until trading today, I'd say more than likely that this portfolio or these 19 companies would be up over 40%. So it's going to be really interesting to see what companies I choose for 2024. I have not decided yet. I have got this watch list all set up. I've got quite a few companies in this watch list right now, 23 companies. I might choose again not to include companies that are already owned, which means companies like Bravura, Big Tin Can, Frontier Digitals. I really want to include that company. Others here I've included Zip, Select Harvest, Domino's Pizzas. Yeah. Anyway, I'll have to decide what to do. And then I've already got enough companies to do that video because I want to choose 20 companies this time, not 19 for some reason. And I've just got to make sure or decide which companies I will include, which companies I will exclude. And I still have to decide whether to include more companies in the potential 20 moving forward, which I'll decide in the next few days, because I won't release that particular video until I've got my dates all set up. My 2024 stock picks released on the 1st of January 2024. That will be after my second night shifts. So wait out for that video in a few days' time. The 1st of January, what's that? Is that a Sunday? So Christmas Day this year was on a Sunday. So New Year's Day is on a Sunday. So I'll release that video on a Sunday, which means I won't do a portfolio update video. I can wait. I don't have to do that every week, I suppose. Anyway, if you have any questions, I am sweating here. It's a pretty hot day in Brisbane again. I should say hot and humid day. Well, this time of year, you always have humid days in Brisbane. A really good article in the Sydney Morning Herald in regards to how meteorologists don't use relative humidity at all. It's useless. Relative humidity is absolutely useless. We look at dew point temperature. And I can tell you right now, the dew point temperature in Brisbane is probably around about 2021. Relative humidity could be like 50%. You can have relative humidity of 50% in the middle of winter, and it's not that humid because relative humidity is directly related to temperature. So when temperature goes up, relative humidity goes down. When temperature goes down, relative humidity goes up. But temperature and dew point temperature are not related at all. So that's why in terms of humidity, meteorologists look at dew point temperature. So that's a lesson learned in meteorology. So anyway, we look at dew point temperature, and I can almost guarantee you dew point temperature today is probably between 20 and 21. In fact, I'll have a look right now on my phone. Maybe I should do a weather channel as well. So temperature in Brisbane's 30. So they're going for a minimum of 23. The reason minimum 23 is because dew points are fairly high. So temperature can't fall below a dew point temperature. That is one rule. It's an absolute rule. So dew point right now in Brisbane's 23, Brisbane Airport 23, Amberley 21, Archfield 22. So I thought it was going to be above 20, but yeah, 23 is quite high. So, and I should also mention, the relative humidity is only 65% with a dew point temperature of 23 and temperature of 30. So again, relative humidity is absolutely useless. Don't ever use relative humidity. I just hate it on TV. They say relative humidity is 100% in the morning. It's almost always 100% in the morning. It's ridiculous. Anyway, rant over. So if you have any thoughts, any comments, leave those in the comment section of this video. Otherwise, that's it for this look at the performance of those companies I chose, those 19 companies I chose at the start of 2023. Did well, up 40% almost. So last thing I should say is I'm not a financial advisor. So even though these 19 companies did really well in 2023, doesn't mean I'm a good stock picker. So if you want a good stock picker, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.